Hey, welcome back to HowieVerse. As always, I'm your host, Howie. Today, I'll show you how I find stock fast. No deep dive, just 5 minutes filter to spot takers worth real research later. We'll run a simple check. We're looking for some key indicators such as growth and valuation of the stock. Let's get into it. I really recommend this website called MSN Finance. This is my first stop when I look for a individual stock to invest in. However, there is one thing that is missing in this platform and I'll show you what it is. If you go to the search right here, you can type any stock tickers that you want to see. For example, I'm going to pick Lulu. The first thing I would do here once you get into the stock page is I would go into this three dots right here and I'll click on the company. So in this place where you can find the company description, in this case, Lululemon Athletica is a technical athletic apparel, footwear, and accessory company. So it's really clear what the company is doing. It's kind of like a retail company selling clothing in athletic niche. The company also organized its operation in four region markets: Americas, mainland China, Asia Pacific, and Europe. Also Middle East. So about Lululemon, if you read the company description, it's really easy to understand. So they sell a physical product to the consumers, and the consumers is going to all of this different channel. For example, like the e-commerce, temp location, wholesales, and everything else. The companies offers a comprehensive line of technical athletic apparel, footwear, accessory market under Lululemon brand. Hey, if you like this video so far, can you kindly hit the like button down below? It will really help out the channel and I really appreciate your kindness. Now we go back to the main page of the summary. The second thing that I will look at is the financial. If the financial is going up in an uptrending fashion, for example, in this case, revenue and net income is going up year over year, that is a good sign. Nevertheless, if you click on the financial here, you can also see in a much detailed view. And since 2018, it seems like the company has been making money, more money year over year, where in 2018 is making $2 billion, now is at close to $11 billion. And the growth of the company is at 24%, 21%, 10%, 42%, 30%, 18%, and here is 10%. You could see that the growth has been going up in 2024 at 42%, but since 2022, the growth has been slowing down. And now the company in 2025 is facing a stagnant growth at around 10%. So anything that is below 10%, I wouldn't care about. However, if I can see a path where it's going up more in the near future, more than 10%, then I will look further into it. Another thing that you want to see is the net profit. So the net profit of the company is been going up nicely as well, prominently in 2022, where the net profits is going up 65%, where it's really close to $1 billion. And in 2024, it actually pierced that $1 billion. And in 2025, it's going up even further. That is close to $2 billion. So in terms of money coming in, the net profit has been really profitable. The business is growing and the net profit is also growing. That shows a really healthy sign. Nevertheless, one thing that is not here is the trailing 12 month. That's related to the things that I mentioned earlier. So what I like to do is I go to Yahoo Finance. So if in the Yahoo Finance, you can look up Lululemon, which I already did in this case, and you go to the financial or the revenue itself, the trailing 12 months and the versus 2025, it's been kind of flat. It's kind of going nowhere. It makes me concerned that the company is not growing anymore. Nevertheless, I would wait until Christmas time because usually Christmas time people are buying are buying more things for gifts and other stuff. And essentially, this stock is kind of like a cyclical stock where it is making more money in one season and then the other season it's kind of lagging behind or flat. Also, for the net income side, it's been maintaining itself at $1.8 billion. No sign of resolution on how the tariff is going to play out. Therefore, Lululemon actually has been impacted by the tariff and macroeconomy. Therefore, I'll keep watching this revenue. If the revenue see any sign of going down or the net income seeing any sign of the impact from the tariff, then I would like to make a note of that and trying to see if there is any path of the company going to be more profitable in the future. If there is none, then I'm just gonna forget about it. The third thing I will look at is the price itself. Though you might say that, hey, this is going backward. Why are you looking at other things, not the price first, right? So first thing that was really important for me was what the company do, and the second is the financial itself. It has growth, then it has potential. Then I'll look at the price. The price itself has been going down from $511 all the way now the price it is at $208. If we go to the bottom of the bottom right here, the price actually go sub $190. So essentially, the tariff that I spoke about earlier is been impacting the stock and the investor having doubt of how the company is going to get out of the tariff situation because there's no sign of resolution. Nevertheless, if the company itself can have that resolution by itself, trying to solve the problem, I think Lulu is a good buy here since the stock has been going down a lot. The next thing I'll look at if you haven't opted out the stock yet is the 52-week range. Is definitely, if you see, is on the lower end of the range here at $208. The lowest of the lowest at 52 range is $186, and it goes up all the way to $423. So in this case, I think the potential of the stock can going up or going back to its original price um, could potentially be happening. However, due to the macroeconomy, it's a very slim chance. Nevertheless, over the time, if you believe Lululemon has branding, that's why this is a quick filter. It's not something that you do just check quickly and buy right now, right? So the thing that you want to jot down is that, hey, I see the price that is really low. Um, Nevertheless, once I see the financial, it's been going up. The revenue has been going up, and also the net income has been going up. However, the 52-week range is at the low end side over here. So there's something going on here, and you would like to investigate further. In terms of market cap, is at $25 billion. It's not as crazy as the other stock like Nike. I think it's like 3 times of that. And then the EPS is positive. It has positive EPS at 14.74. And for the PE itself is at 13.48. Lastly, that I will look into is if we go back to the financial and we go back to the balance sheet, and I would like to see if this company can pay its obligation in terms of paying its employee, in terms of paying its loan. So we look at the current asset right here. The Lululemon currently has about $4 billion, and the current liability is at about $1.8 billion, right? So the company doesn't have a long-term debt, which is really good. I do not want to see company that has a lot of or huge long-term debt that is going to eat up all the margin. So in terms of balance sheet, this platform doesn't show you the details. So we need to go back to the Yahoo Finance here, where I go to financial and the balance sheet. You have this drop down here in the current asset. You can look at the cash and cash equivalents. It has $2 billion almost. And so everything is just in cash, and it has receivable. Receivable is actually something that is being it's trying to collect the money out of the things that it's selling. And inventory is in the term of the physical products or equivalents to be sold. So the inventory is currently what they have in their store or in the warehouse. However, this needs to be converted into cash, and inventory is not actually cash itself, but they basically bake that into the current asset. And in terms of liability, the liability is in the payable. If we go to down here, payable, total tax payable is at $200 million, account payable $271 million, and the total payable is at $471 billion, and it has all the expenses, and all in all, the payable is at about $800 million. Earn provision, paying pension or retirement. It has debt and capital expenditures. We go down to that. You can even look more into this. The current deferred liability, deferred revenue, other current liabilities. That's it, y'all. First, we look at what the company does. If it pass your liking and you actually understand the business and it's not too complicated for you to understand the business, then I'll go to the next step. The next step is the financial. On the financial side, you want to see the company revenue and the net income has been growing steadily, preferably more than 10% year over year. However, if you have a company that is growing 20 to 30%, that would be really nice. Then after that, I'll look at earnings. If earning is good and the company has been performing well lately, it will look further into the stock itself. In the case of Lulu, the company has been beating earning expectation, so it definitely passed this criteria. Next, I'll look at the valuation of the stock. Think about the PE, the PS ratio, the growth relation to its peer, because these are really important factor when you want to evaluate the stock further. After the stock pass all of the above, only then I will go back to the price itself. In this case, Lulu has been going down from $400 to $200 over the past 2 to 3 years. However, revenue and net income wise, they has been growing steadily. So in this case, that triggered to my mind, if the revenue and net income is going up, however, the stock is going down, there is something fishy going on here. After the stock pass all of the above, only then I will go back to the price itself. In this case, Lulu has been going down from $400 to $200 over the past 2 to 3 years. However, revenue and net income wise, they has been growing steadily. So in this case, that triggered to my mind, if the revenue and net income is going up, however, the stock is going down, there is something fishy going on here. You really need to do further analysis into the stock if you can justify that the stock is going to perform better or hold its revenue and net income growth in the next 3 to 5 years. Then the stock going down is actually a good thing because you can buy a great company at a great discount. Hey, thanks again for spending time with me today. If you like more content like this, please hit the like button and subscribe to the channel. I'll see you next week.